All right, so welcome everybody. This is Late Night with Rick. This is going to be an open forum. There is nothing specific that we're going to go over except only what you guys would like to cover. I've got a couple of points people had emailed me ahead of time, and also, you know how the world of technology works. If for some reason this thing dies on us, we were making a recording of it, so we will have a replay link for you. So if you'd like to go back and listen to it. Just a couple of housekeeping things. Bob Manna is on the line here. He's going to be helping us. And then Steve, everybody knows, is doing all the IT. And right underneath the screen there where it says Stock Life Cycle, you should have a little window there. And you should be able to type in any questions that you have. We've got over 80 people is what my understanding is that's on the call tonight. So we can't really have an open mic because it'll just go bananas on us. So in order to have kind of a little bit of an orderly fashion, what we're going to do is to do it by actually typing in the questions. So if you just look underneath the presentation there at the bottom, you should have a little window where you can start typing any questions. And again, type them in right now if you have something particular, and then Steve will interject in between on questions, and we'll go from there. All right, so let's get started here. I'm very excited to tell you I've been talking to quite a few students, and this is one of the reasons why I wanted to do this tonight. Because some of my successful students I was talking with, I said, what is it that seems to separate you from everyone else on the success that people are having? And listening to them, and this is over 30 people that I spoke with, listening to them, it came down to one word, and that word was discipline. All of the people that are having outrageous success with our system are disciplined. Now, discipline has a couple of different meanings to different people, but what the majority seem to say is that every night they take the time, that 5 or 10 minutes, to look at their watch list, their 4 or 5 stocks or 10, whatever they're watching, and every single night they go through and they look at those and they make a buy or sell decision. Meaning if they're already in the stock, they're looking, do I have an indicator to sell? Or if they just got into it, or they're looking to get into it, do I have signals to either get in or add to a position? So I'm excited to share that with you because that's been my personal belief as well, is over the years, the people that I've seen that are disciplined and just take that every single night, take the time to sit down and take that 5 or 10 minutes, are the people that are successful. And guys, I got to tell you, in this market we're in right now, it's just I've done this 25 years and I've never seen a market like this. It's just God's gift to us as far as just this thing's running like a rabbit. And I've had some new students say, well, Rick, this thing's running up so high, it's going to turn around and go down on us. And the answer is yes, it will. And we're prepared for that because we have the education. We have that specialized knowledge that tells us specifically what to look for. And we have the objective way of looking at it because we are using our moving averages and it's a repeatable system. So let's take a couple look stocks where things are at the moment. And let's see if I can get my technology to work here. What we're going to look at first is the stock life cycle. Now, if you notice here on the life cycle, right now we're in the growth phase. I think nobody could dispute that. Since the election, the market has just been on a tear. And people are concerned, well, Rick, it's going to turn on us. And the answer is yes, you're right. It's going to. But again, if you just take the time to sit down and learn and be disciplined to follow your checklist, you're going to do very well. Then, of course, the next thing is the maturity phase where it's going to slowly start to roll over on us, and then it's going to decline on us. And that's okay. Just like back in 2008, we made over 80% on our money. I don't care what direction it is, just give me a direction. Now, as always, we always ask, okay, well, how do we determine that direction? And that's one of the things I want to go over with you tonight, just for clarity. Again, if you have any questions, type them in the bottom, and Steve will pop those questions up for me. Because I can't see your questions, so I'm relying on Steve. It's between you and Steve to make sure you guys ask the questions. But okay, all right. Thank you, Steve. So let's start with what does Rick do first? Every night when I get through at the end of the day, I look at the daily DJIA. This is what my chart is. I don't see anything different than you. I don't have any special magic wand. I'm looking at the same chart you're seeing right now. And I look at this, and here's what I look at first. I look at my 10,000 foot view. I want to know, what is my trend? What is my direction here? I look at the blue line over the red over the yellow. The blue, in the case of this is stocks, is 15, the red is 50, and the yellow is the 200. And all I want to know is it in that order? If my blue is above my red is above my yellow, I have a full-blown bull market. Now, because that is a 15 moving average on the blue, and each of those marks are a black mark or a daily, that means that those dailies are going to move up and down faster than what that 15 is going to move, and obviously faster than the 50 and of course the 200. So what I'm looking for is, where are those black marks? And they tell me, give me an indication, if I'm above the blue line, I'm just in hog heaven territory. So in this example you're seeing today, this is taken from today. You'll see that we actually had a 2-day pop on the Dow, and I want to point that 2-day pop out because I want to show you a couple of trades that we've had EOD here. But if you notice that the 2-day pop, looking at it today, it's starting to show a little weakness. And our experience tells us, well, that weakness is because it's way above the moving average. So on that daily chart today, what I'm looking at is a 10,000 foot view. First of all, I look at, where's my blue line, where's my red line, where's my yellow line. Okay, that tells me I'm in an upward trend. Now, where are the daily marks? With the little black lines, where are they? They are too above the blue line, so I'm in good shape. Now I'm also down looking at my MACD. Do I have a MACD crossover? Yes, I did. Do I have black buy volume? Absolutely. So now what this tells me is that I've got, not only my uptrend is a fully bull market, but I have a point of entry here. So if I was to show this on the DIA, it mimics the Dow Jones that we're looking at here. So the DIA, I can guarantee you, would look a lot like what we're seeing right now. So again, this is our first start, this is our first chart, and this is what we look at every time. Okay, Steve, you got a couple questions? On CMG. Okay, well, hold that question because I don't know how we'll do that, Steve. This is on the PowerPoint, so you'll have to show me. But I want to get through the PowerPoint here first, and if there's any questions that I can answer in reference to that, we will. But then I'll be happy to go over that CMG or any specific trades as soon as we get done with this. So is there any other questions that I can answer while we're doing the PowerPoint here? Guys, so here's an example while he's fixing that part of the screen there. This is the one of them that we use. This is one of my favorite that I personally use for cash cow. This actually came from one of our students, Craig, who's a very successful trader, and him and Bob started trading it a lot, and so I just kind of caught on to it from them. And for those that do the cash cow, you'll understand why this is such a valuable chart here. But let's look at it strictly from an EOD perspective. So what we're looking for, if you go over to the left side of the screen, Steve, can I use the mouse here to go to the left side of the screen? Okay, there it is. Thank you. All right, so let's go to the far left side of the screen. And if you look here, you've got a crossing of the blue line right here. You have a crossover of the moving average, and we have our black buy volume. That's our buy signal to the upside. Now again, remember, they'll all line up usually within a day or two. They don't all line up exactly on the same day. And the reason is because it depends on where the price bar is. That black bar, it depends on where it is at the time. So what happens is sometimes it'll be far away from moving average, and by the time it gets back to that moving average, the 15 in the case of stock, the MACD may have already gone down at that particular point. So it'll be within a couple of days. So going back to this particular one, if you look here, here was our buy signals. Now again, you could go all the way up to the height of it here, the moving average. And Steve, I don't have a mouse here. Isn't there a way to turn the mouse on here on the bottom so the mouse is on? The mouse is on the third screen, Steve. How do I get it back here? There it is. I got it. Okay. So what'll happen is you end up with this issue right here, and it does a moving average pullback. So the question becomes, well, where do I get out of here? And you have a couple of points. If it gets way above a moving average, you simply let your trailing stop take you out. Or if you're going to be managing it, if it's not making a new high, and a new high means looking at the top of the bar, you can see here we're making new highs. If it stops making new highs, we'll then consider getting out also. So if you did not use the exit of a moving average pullback, well then you'll wait till it actually closes below the blue line. In this case here, this is where it closed on love, and again this is where we get out of our long. Now when you get out of a long, that's also an entry to go short, meaning that we've got a close below the blue line, we've got our MACD crossover, and we've got our red sell volume. So now we enter a short position. Now also, again, looking at this from a 10,000 foot view, our blue is above our red and our red's above our yellow. But now as this starts to go down, look what happens here. Now we have our red is above our blue and our blue is above our yellow, so you got this blue in the middle. So that tells us that we've got a possible transition, and when you see those that look like that, just your moving averages, that's typically what we call sideways movement in the moving averages. So now, but look at where our price bars are. Here, all the price bars on our uptrend was above the blue line. Now they're all below the blue line. And we just keep riding this puppy all the way down. And again, here, you probably would have got a little nervous because it's doing a moving average pullback. And that's okay. If you chose to get out of this just on the moving average pullback, just like you would have done up here on the upside, it's quite all right. If it doesn't meet the standard to go long, then you can always take it back short. But here was our actual signal to get out, is now we're getting over here, we're getting our blue line, we're getting our black gets above it again, we've got our MACD crossover, and we've got black buy volume coming in pretty strong. So this is our signal right here that we're looking to go long. And again, there we go again. We're back up above the blue line, the price bars are above the blue line, and goes all the way back up until we get over to here. Again, you got two choices. Either a trailing stop's going to take you out, or you may manage it yourself and say, you know what, if this thing breaks, I'm going to get out in here, which is fine. Either way is fine, as long as you're disciplined and you do it every day. That's the big idea here. So now, the stock ends up going below the blue, down to the downside. And again, we're looking for a place to get out. And again, here's our out. We closed above the blue line. Our blue, we've got our crossover of our MACD. We got our black buy volume. So there are many patterns in here, but this is what I'm talking about. If you will take the time every day and look at these, in this market, it's handing it to you hand over fist. Now, what's happened for us here in the last couple days is I want you to look at this particular pattern. Now, we talk about this in the class itself, in the online class, as well as we talk about it at the physical classes. But this is a classic that has happened here in the last couple of days on LUV. This is a two-day pop. A two-day pop is when you have a price bar, the black, is generally 2 times or greater than the average price bar. So you can see how this is here is approximately 2 times. Guys, it's not that technical. You don't have to say, well, is it exactly 2? Well, maybe it is or isn't. The point is it's a lot bigger than the other one. That's the whole point. The second is that you like to have the close of it up within right at the very top. That's what you like to see. And what that's telling us is that the bulls came in, they bought it down here, and they ran it up all day, and there's a lot of momentum going into that close. And this two-day pop works extremely well Monday through Friday. If you get a two-day pop on a Friday, meaning you get this big long like this, the momentum generally doesn't carry over the weekend till Monday. But here it is where it opened today, and it was perfect, absolutely perfect two-day pop. So this is why you're looking at these stocks every single day. This is on my watch list. This was brought to me by Craig and Bob months ago. but it's on my watch list that I watch every single day. And we also day trade this, by the way, because when you get these great movements like this. But as far as EOD is concerned, you can see the pattern. It tells you exactly where to get in and where to get out. So this was a perfect 2-day pop that we have right here. So let's go next. We're going to look at Shake. This is Shake Shack, if you guys remember. Again, same thing. Look over here on the left. You can see that we had our signals, and up to the upside, here's where it told us to go down, ends up going down, all the way down. Here are our crossovers. Remember, our price bars are below our blue line. Now they're above the blue line. And then look what happened here yesterday and today. Again, this is why you have your watch list. And you look at these on your watch list. It was a perfect 2-day pop again. So this is why you've got to take the time and the discipline. And guys, this is why the people that are making the big bucks, particularly during this run, is because they watch this every single day. So please take that 5 minutes and look at it every single day. All right, let's look at another one here. All right, this is PayPal. And again, PayPal just ran all the way up. And the reason I put this one on here is because I get people a lot of times they go, well, Rick, I got spooked here, and here's why I got spooked. I saw the moving averages running to the upside, but I saw my MACD over here at a crossover to the downside. So I lost my mouse again. Oh, here it is. So a lot of times you'll see this up and down movement with the MACD. But remember, always our primary that we look at is the price bar. The price bar is real time. Everything else is lagging. It lags behind. So the first thing we always look at is where's my price bar in relationship to this when I'm looking for a buy or sell signal. Now, when I turn this on, again, I look at my 10,000 foot view. My blue is above my red is above my yellow. So this tells me, okay, stay in. I'm staying in this. Now let's look at it today. This has been a beautiful trade all the way up. Now, but look what happened today. So today it tells me that we had a huge sell-off on PayPal. And the bar here went all the way down a little bit below 72, but it came back. Now, this is not a perfect 2-day pop to the downside, in my opinion, because here was where it closed today. That means that some of the bulls came back in and bought it back up. Had this closed down here the same way that I just showed you on the Shape Shack, or the Shake Shack, if you have it right at the end, that is huge, huge momentum. Now, I'm still going to watch this for tomorrow, and if it breaks the low at 10 a.m., then I'll take it short tomorrow. But I'll definitely be watching this on the day trading because it's got a huge move. You know, that right there was a $6 move today. It's a beautiful thing. But again, here we are at the end of the day, taking that 5 minutes to look at the chart. I can see right here, I have a possible buy for a short tomorrow. I have it closed below the blue line. I have my MACD crossover, and I have my red sell volume. So all I'm looking for now is tomorrow at 10 o'clock, I'll be looking at this, and if it continues down, then I'll take it to the downside. Okay, so there's the PayPal. And now does everybody understand? This is why you look at it every single day. So if I was looking at this, and even down here, if you look at your MACD, you can see it's crossing up and down, up and down. But I don't have my signals anywhere up here that tell me this thing's going down to the downside, except for today. So this is why you take that 5 minutes and look at those stocks, and then you're ready to go. All right, Steve, if you can get me on off of PayPal here and put on the big charts on DJIA, I'll go over those other stocks as people want. Oh, it'll definitely start to lose momentum on this after the second day, generally speaking, because it gets. Excuse me, I've got a cold, so pardon me. It gets too far away from the moving average, so it just simply does a moving average pullback. That's why we call it a 2-day pop, not a 3-day or 4-day pop, because the majority of the time it only does it for 2 days. But watch it. If it doesn't, and it doesn't do a pullback, we'll stay in that puppy and let it run and let it eat. Steve, if you can get me back to my icon screen, I know where my thing is. Okay. Well, I'm gonna take a drink of water while you do that. And guys, understand, with this market the way it is, I don't know we'll ever see another market like this. I hope we do, but holy cow, is this thing running? Okay, Steve, I've got this up here. I put it kind of like that so people can see it. Is that better? Does that help? And all right, and then it'll go CMG. Somebody had asked about. I'll pull this back up again. Okay, we good to go there? All right. So whoever was asking about CMG, on this. Again, that's a 2-day pop that you've got right there. It's also closed a gap to the upside. Now, if you look at this one closed way up to the high side right here. So that might continue to a third day. I'm not in CMG, but if anybody was on that, that's one of the ones that we do look at. That would be an awesome trade right there. So just if you're in it, I would stay in it and watch it for the next day and see where it goes from there. All right, what else you got, Steve? Other questions? Oh, because the fundamentals are the facts about the company itself. And you can have a very strong company. But when you look at the technicals that are helping us to decide whether we're going to go long or short, that's telling you what the market thinks about that particular stock. In other words, when we look at that particular company, that company is telling us that we're meeting our sales goals, we've got good cash, yada yada yada. It's the facts about that particular company. But the market itself may say, you know what, we just don't like this company overall for whatever the reasons. I mean, there's a myriad of reasons. So that company's stock can turn around and tank. That's what actually got me into technical analysis was that same scenario back in 2000. I had bought Cisco back then, and Cisco was they owned all the computer equipment. They had billions of dollars in cash. They owned like 70% of the market. So from a fundamental point of view, that was an ace stock. But all of a sudden in 2000, it started going down. And I'm like, well, how can it possibly be going down when this thing it owns the market and has all of this cash as a company? And the reason is because the whole market was tanking at that point. So therefore, that company is going to go down with the market. As the old story goes, think of it as a tide. The market raises the tide, goes up, it raises all boats, meaning all individual stocks. Well, as the tide descends and goes down, then so goes the stock with it. So hopefully that's the answer to the question that you're asking. You got another stock or question, Stevie? I have no idea, and that's the whole beauty of the system is I don't predict. I just go by what it showed me today, and that's why I showed you those stocks. Those stocks told me exactly how to play them. I have no idea what the news was on any of those stocks, and I don't care. All I know is as I tell all the kids, young kids that are 10 years old, is if it's above the blue line, you buy it. If it's below the blue line, you get out. And those kids always do very well because they that's all they need to know. And in my personal opinion, um, I don't care if somebody ran off with the secretary or somebody embezzled something or somebody got sued for a patent infraction or whatever. It doesn't matter to me. That's why I don't have to sit down every night at TV and look at all these talking heads on TV because it doesn't matter. Whatever they're there for entertainment value, and that's it. So if those people excite you and they entertain you, well, go watch them. But I would not be taking their advice because the market is what it is, and that's what I love about the stock market. They can't lie to you. It is what it is. If you look at this Chipotle a month ago, it was worth $270. Well, today it's worth 300. Well, that's what it's worth. Is today it's worth 300. Will it be worth 300 tomorrow? I'll let you know tomorrow. But I don't know where it's going to be in December, and I really don't care. Next. Yeah, absolutely. Great question. On a 2-day pop is it usually does get far above a moving average. So the question becomes, or where do we want to sell that, or where do we want to take profit? And the answer for me is if it's not making a new high. So somebody had asked a minute ago, well, can it go 3 or 4 or 5 days? And the answer is yes, but not typically. That's why we don't call it a 5-day pop because it's only usually about 2 to 3 days maximum. So the answer is if you're in a 2 day pop and everything worked out well for you, the next day you get up at 10 o'clock and you look at it and it's not making a new high, then I would sell it. I would take my profit and sell it because it's probably going to do a moving average pullback, high probability. Next question. Generally 5 or 10 is all you need. Uh, Remember that when you have your stocks, you went over to your IBD and you go through and and they met the criteria for that particular week. You want them on your watch list for about 4 to 6 weeks. If they don't seem to take off, in other words, they don't seem to meet the technical criteria on the charts, after 4 to 6 weeks, just throw them off, get rid of them. They're a dud. Now, once they've met the criteria 1 week in the IBD, they're good for that 4 to 6 weeks. So if they met them on week one and then next Saturday you go and check your list again and those companies are not on from the previous week, it's okay. There may be some new ones. So maybe you get 1 or 2 this week and you look at it and you get 2 or 3 next week and then 3 weeks down the road you pick up another. That's how you collectively get your list together. But as a general rule, you don't need 5 or 10 of them, 15 at the max. But again, if you look at how fast it took us to go through those 4 stocks that I showed you, it only takes 30 seconds. So you could have 10 or 15 and literally it's going to take you 5 minutes and you're done for the day. But generally 5 or 10 is all you need because what will happen is as I showed you with the Love, LUV, and PayPal, uh, these in the Shake Shack. If you look at these, I showed you they went up and they went down. They went up and they went down, and that's what you're looking for. I'm okay if the Dow Jones is flying high and some bad news comes out on the company and it just starts to tank. I'll take that thing short. I don't have any problem with that at all. But the whole point is if you were not watching that stock on your watch list, those 5 or 10 that you have, how would you have known? And you won't. You'll miss it. Next question. Yes, they do, but I don't recommend it. That's really an advanced system. So why complicate the EOD? That's why I use the price bars that you have because they're so much simpler than using the candlesticks. We use candlesticks in day trading because it has a whole different purpose in day trading. So I would not recommend them for people that do the EOD, but yes, you can use them if you want. Uh, and that was Steve says some people may not be able to hear him. He asked me the question. Somebody had asked, can they use candlesticks, or are they just as effective as a price bar? And the answer is yes, but learning them can be tedious, and to me, it's no reason to. The price bars is the reason why I use it because we keep it simple. Celgene. All right, 1 second. I like Celgene. Okay, so do they have a question? Okay, so again, first thing we do is what? We look at our 10,000 foot view. So my 200 is here, my 50 is below my 200, and now my 15 is below my 200, 50 and 200. So that tells me this stock is a full-blown bull down to the side. It's going to the down. Now what we have to look at is, again, this is a 15, so it's 15 days behind. Now we have to look at is the actual price bars themselves. So in this example here, you've got a crossover of the blue here. You've got your MACD, and you've got some black buy volume coming in to the upside here. So this is what you want to look for in this type of trade. This usually is a very short-lived trade. So in other words, this goes down and then it slowly starts to recoup back to the upside. So if you take a position like this in Celgene where you've got your primary indicators are telling you that the 200's up here, you got your 50 here and your 15 here, you don't take a big position on this because there is something that whacked the daylights out of this. If you look at this, just a month ago it was 145, knocked it all the way down to 95. That doesn't just happen out of the blue. Again, people would ask, well, Rick, why did it do that? Who cares? All I know is it did it, and I know how to trade this. So what that tells me is that this thing has a long road to recovery to get all the way back up to the 145. This is why you hear us when we talk about that stocks walk up a hill, but they jump off of a cliff. So if you look at this stock from 145 down to 95, if you go all the way to the left, we can't even see how many months ago that this thing was at $95. So in less than a month, this thing has lost months and months and months and months and months of profit. So how we trade this now is we have a buy indicators here to buy. Would I go long with a lot? And the answer is no. I don't have any problem on the recovery here, but I would not take a lot of shares. So normally if I took 1,000 shares on this, and this is one that was always on my list and I traded it a lot, I would probably do 1,000, instead of 1,000 shares, I'd do 100 shares. Same way with contracts. If I normally did 100 contracts, I'd only do like 10 contracts on this because this is a very unstable stock at this point because of everything that's going on. So I hope that explains that this tells me that this is a full-blown stock to the downside, but it's trying to make a recovery, a small recovery. So until this thing is totally up to the upside, meaning that my blue is above my red's above my yellow, and my black is here, I would not take this real heavy to the upside. Are you saying instead of the stock buys just calls? Correct. Yeah, yeah, you can do that. That's why we were talking about. That's a good point, and that's why we were just talking about. If I normally in this stock was trading 100 contracts, I would only trade 10. Or if you traded 10, I'd only trade maybe one or two, for that reason. A dead cat bounce is what Bob was talking about. That usually when stocks fall, they usually hit. It's just like it's kind of cruel to say, but a cat bouncing off the ground when it hits. But um, that's what he was talking about there. All right. Any other question on it? Or Bob, you got any other comment on that you want to make? Well, thank you. Okay. CMG from where, Stevie? All right. So November 16th. Okay. So that's right here. So what is the question? They want. Okay. Sure. So here's our entry for CMG, which is Chipotle. If you look over in the top left side, you know I don't understand that place. I've eaten there one time and I hated it, and I just don't understand the attraction to it. But somebody's enjoying it, so but I do like the stock. And what you have here is again you've got a crossover, but we don't have a crossover of the blue line. So again, this is why we take a small position. Look at our 10,000 foot view. Always first. There's our 200. There's our 50. Here's our 10. So our price bars were below it at this stage here in consolidation. Now it crossed the blue. We got a blue cross also on our MACD, and we got our black buy volume. Again, you don't go into this when you've got a down signal on this. You do not go into it with a lot of longs. So again, if your normal was 100 contracts, if you're trading options, then you would go in with 10 or some smaller, whatever the proportion is. If you're only buying 5, I would go in with 1 for the same reason. Now here we had a possible get out of town signal right here. But did we have a MACD crossover? And the answer was no. Did we have the red sell volume? Yes. So we had 2 out of 3. But we don't sell on 2 out of 3. We sell on 3 out of 3. We don't buy on 2 out of 3. We buy on 3 out of 3. So in this particular case, this gave us a 2-day pop. And also, again, you know, I have a lot of people that go, well, gee whiz, you know, gosh, I should have, instead of buying those 10 contracts, I should have bought 100. How did you know that you're going to get a 2-day pop here? And the answer is you don't. statistically and historically tells us that when you have a stock like this from a 10,000 foot view, the 200 is above the 50 and the 50 is above the 15, and you've got this down here, these typically don't last that long. Now, if it turns around and now the 15 is above the 50, okay, it's starting to get a little stronger and possibly it could be a turn. But at this stage of the game, I don't know that. And that's the whole beauty of the system is you don't have to know it. You just got to know, do the indicators line up? Yes, they do. Then I'm going to buy. If the indicators line up to sell, then I'll sell it. Does that answer their question, Steve? All right, cool. Again, always look at your 10,000 foot view. Just sit back in your chair and say, okay, where are we here? Okay, next question. In a week? I don't do hardly any in a week. It depends on when I get sell and buy and sell signals. Um, I generally, it depends on the stock, on how many they go, and it depends on the market, how well it goes. The last few years, I say last few, probably 2 or 3 years, I've been doing probably 15 or 20 overall for the whole year, because that's when the sell signals were. But years prior to that, because the market was kind of flat and what have you, I'd have 5 or 6 for the year, and that was it. And you're talking making over $1 million a year with 5 or 6 trades. So in EOD, it's not about how often we're going to trade. It's about of when do I have my signals. That's what I'm looking for. I don't know if Steve can if I can drag this down. Let me see if I can do this. This might work or might not work, but I'll give you an idea here. Uh, let's see if I can drag this. Nope, that's not going to let me do that. Uh, Steve, um, what I'm trying to do, because I want to show him this, I wanted to put the PowerPoint back up again. Could I show him that? Oh, well that was a smart idea. Okay, guys, watch this. Here we go. Everybody go, ooh, ah. Okay, so the answer to the question about how many EODs do I do a week, the answer is zero, unless for some reason all the indicators started piling in for that week and my watch list just went crazy. Then I'd like, okay, everybody in the pool, here we go. But here's what I wanted to show you over here. Remember, here was our long indicator. There's one trade, there's two trades, there's three, there's four, there's 5 trades on love. That's over a 6 month period. So let's assume for a moment that this thing still gives a little up and down for the next 6 months. If that is the case, then that's 10 trades you're looking for the whole year on EOD on that one particular chart. Hold on a minute, I'm going to cough. There we go. I didn't want to cough in everybody's ear. Okay, so let's go back and let's look at this one. This is another, again, a 6 month chart. Look at the bottom. Here's June through November here. And what you're looking at is here's one, here's two, here's 3 trades. So in this case right here, that's only 3 trades on that particular stock over a 6 month period. Again, if all things being equal on the next 6 months, it did again, and you trade another 3, then it's 6 trades for the whole year. So that's why I'm saying this has been a very active market that we've had. So the last couple of years has been a little more than average, but to make millions of dollars a year, you don't need 4 or 5 trades a year. It's not the quantity of the trades; it's the quality of the trades. This is why those of you that's been with me for the last 5 years, if you remember the Facebook trade that we did when we were at Circus on, I believe it was May 12th, 2012. We did the EOD trade from there. That one stock is worth millions of dollars, and off of a $5,000 investment. So it's not that you've got to be having all these hundreds of stocks, 5 or 10 on your watch list, and you're done. You just watch it and go from there. Uh, does that answer the question for them, Stevie? Okay, thank you. A CBOE, that's the CBOE, the stock. Okay. No, that's all right. So tell me what's wrong with this stock. And the answer is nothing. This is this is exactly what you're looking for. All right. Now look at this one. You can see over time it only gets so far away from the moving average, and then it slowly comes back to the moving average. See here on right here beginning of November, got a little bit above moving average and pulled back. And look how high it is here. And guess what it's doing today? Moving average pullback. So again, looking at this from a 10,000 foot view, this is the first thing we look at. Here's our 200 day is down here at the bottom. Our red 50 is in the middle, and our blue is on top. So what does that tell us from a 10,000 point of view? It tells us this is a beautiful thing. It tells us we're in an uptrend. Okay, now let's take a look at our price bars, the little black price bars. Where are they in relationship to that? And they're staying the majority of them above the 15 day. This is God's gift to traders right here. This is exactly what you're looking for. This is one you just back and kind of yawn and go, and just keep selling options on it, Uh, would I hold this currently if I was long? And the answer would be no, because it's telling me to get out here because it's doing a moving average pullback right here. Now, if tomorrow, if it doesn't stay above this 125 where it opened tomorrow, then I would get out of it if I was currently in it and take the profit and wait for it to reset. So it's going to do one of two things. Either it's going to continue up to the upside or it's going to go to the downside. And and it's starting to see I got red sell volume down here, so I got one signal to sell short. I don't have a second signal to sell short, nor do I have a third signal to sell short. And again, remember guys, you can still sell short in an up market. It just generally doesn't last that long because all this is people taking profit. That's all that's going on here. So once the profit taking is over and it doesn't make any more new lows, generally people go back in and buy it. And when it's in an uptrend, that's why you have very, very short to the downside. All right. So any other questions? Yeah, the question was Steve said somebody wanted to know how many I have on my list, and I don't know. It's probably 10 or 12. But these are people I've just had for years, just like the ones I've showed you. And I don't trade them off that often. But if you look in the forum, people put them in there in the forum, and occasionally I'll look at them and see what it's doing from there. Well, in this case, we're talking about the stock, so it's our default is the. His question was, are we using the 1550 200 or are we using the 1040 200 for the options? And the options generally is 1040 200, and the stock is 1550 200. And the only reason is the 1040 moves a little faster. So people ask me sometimes, well, Rick, so I don't have to flip around and I mainly do options. Can I just use the 1040 for stocks as well? And the answer is yeah, absolutely. You don't have to have them both. It's just the purpose of it is for momentum, and options move a little faster than the stock does. So that's why we use it like that. Oh, well, you always should buy the option because number one, it has lower cost, and number two is has a greater return on your investment. So again, to me, an option is when I have that choice, I always take the option over that uh, between the two. Well, HD, I can tell you, was a beautiful thing. As some of you may remember, I live in the downtown, beautiful Land O'Lakes, Florida, which is the center of the universe. And if you remember, the eye of Irma came right over our house, and it was that was kind of a unique situation. But the moral of the story is you want to listen to the news. This is when we talk about news plays. In the case of Home Depot and Lowe's and those type of people, because they were selling out of everything. So everybody knows you're going up with a good quarter because they're selling stuff like crazy because of the hurricane. So in the example right here, you can see where everybody started preparing for the hurricane right here, and which was kind of ironic. I didn't realize that hurricanes, the number one day for a hurricane hit in recorded history for Florida is September 10th. And Irma hit us September 10th. So I thought, how ironic. But if you look at it here, you can see where it's turned. The storm had pretty much turned and said, "Okay, we're coming to Florida," and everybody just ran to Home Depot and just started buying stuff like crazy. So you can see where you had the entries there. But as far as back over here, we had another entry on Home Depot, which is about a month ago. Uh, Currently, it's pretty far above the moving average. If I was in this stock, if I was trading it on EOD, I would stay in it. I don't have any reason to get out of it, but it's paralleling pretty well from there. Yeah, yeah, that's what we were talking about a minute ago. I don't know if people can hear you also, Bob, so I'll repeat the question. Bob just asked, how long do I keep them on my IBD list if I find the fundamentals? And generally, it's 4 to 6 weeks. If that particular stock you do not find that it's meeting the criteria for a buy, long or short, doesn't matter, then throw it away and go get you another one. And then over the years, as you do this, you'll just have those 5 or 10 stocks, maybe 15, that you just like to trade. You just like to stick with them because those trades do very, very well. Go ahead, Bob. Did you have another question or another point? Oh, yeah, absolutely. Bob's statement, for those that didn't hear him, was saying that there seems to be a misnomer that you have to have met the IBD criteria in order for it to be a good stock. And the answer is no, not at all. The reason I give you the IBD as a student is so that you have something to start with, so you can find some good stocks. You know, your Uncle Joe may say, "Hey, look at Boeing," BA, or somebody may say, "Hey, go over and look at this stock," particular stock, whatever. If you remember, I always talk about in class about the ARI that I had, which is an alcohol-related incident, where a neighbor gave me a stock, an inside tip, that he said this thing's going to take off. And so I went over and bought the stock without even looking at the criteria. I just did it because he told me, which is a dumb thing to do. And it cost me $103,000 when I did that, but who's counting? But don't do that, is what I'm telling you. But if somebody tells you that, my Uncle Joe works at Google, and they're going to have a really good new product coming out, I'm okay with that. Go over and look at your technicals and make sure that those technicals meet the criteria. And maybe it's a week later that all of a sudden it takes off and it meets the criteria. So yeah, don't think that if somebody tells you a stock or you like a stock and it does not meet the IBD, do not think that's not a good stock to trade. That's a great point, Bob. Well, I'm going to make two changes. This is, remember, we're talking about stocks tonight. Williams percent R is used in options, and that's the number one thing I get questions on is the Williams percent R. I personally like it because to me it gives you a heads up of what's coming, but it really seems to throw people off. So what I'm going to do, I'm going to drop that from the system, and probably I'm going to drop the 1040 as well. And just to make the system even simpler, that all you've got to do is if it crosses the blue line and closes above that blue line, you got a MACD crossover and you got a black buy volume, then you buy to the upside. And then just the reverse, you go to the downside. So yeah, those two things, we're rewriting the manual. Again, none of the other information has changed in the manual. I'm just going to drop those two, and what I'm going to do is I'm going to put those in an advanced section so that if people want to use those, they'll still be available. But as the primary system, I'm going to take those out. Yeah, absolutely. That's a great question. Steve said, somebody asked the question, is there any advantage to buying the stocks 90 days out? Or excuse me, buying the option more than 90 days out, which is typically what we recommend. And the answer is, yeah, because if you just don't want to be buying and selling as much, you'll save a little bit on commission. The problem is that when you go out further than 90 days, then you're going to start getting into the earnings, and you want to make sure that you get out of earnings. So I don't really see the advantage of going out further, but yeah, you can if you want to. But again, if you're one of those people that holds through earnings and have financial suicidal tendencies, then yeah, you can go out further than that. There is no right answer to that. Uh, if you look for an example on those four that we gave you earlier, let me pull that back down since Steve just taught me how to do this. Pull this PowerPoint down. If you look at the Shake Shack trade right here, here's 1, 2, 3, almost 4 months that you're in that trade, compared to if you look at Love, you're only in this trade for 2 months. Here you're only in it for 3 months. Here you're in it currently for a month. So there's no right answer to that. There is no average. It just is what it is. Okay, so the question is, how long do I keep it on my watch list if it no longer meets the IBD criteria? And the answer is 4 to 6 weeks. If I don't have a technical run on that in 4 to 6 weeks, I throw it away. You're done. Goodbye, because it's a non-performer. So if it again, like we talked about before, on week one, if you look at the IBD and you find two, those two might not meet the IBD criteria the second week or third week, and that's okay. It's just that now you take those two on week one that you found, and you move those over to your technicals and see if it meets the technical criteria. In other words, what does the market think about them? And if the market thinks good about them, in other words, it meets all the criteria, off we go. No, there's no right or wrong to that. The whole point of that is keep your losses small. So if it ends up turning around on you, that's all you want to do. So there. Oh, thank you. Somebody asked Steve, is there any preference I have over using a trailing stop versus doubling the daily average? And the answer is no. It's whatever that you want. The concept is that you want to keep that loss small. That's the whole point of it. But Bob is a very good EOD trader. He's probably one of the most disciplined people I've ever met in my life. And he was talking about that what he does personally is him and his CA, Kelly, every day at the close of the market, they go over their trades together because she trades also. The CA, Kelly, trades as well as Bob. So they go over them together and bounce ideas off back and forth. And he said literally it takes him 5 minutes and he's done. So that was, I asked Bob if there was any words of wisdom from his perspective as a student, because he started with us from the very beginning, back in 2009, I think, or whatever, which he had never traded our system, and so he's done very well with it. So I would listen to what he says very, very closely. All right, here we go. That's all right, I got it now. What is it? ROST, somebody wants to look at? Okay. All right. So again, what's our 10,000 foot view here? Our 10,000 foot view is we look at our 200, we look at our 50 and 15, and where's our price bar? So what we have here is on a 10,000 foot view, we have our blues above our red and our reds above our yellow. So we're in good shape. So our 15 is above our 50 and our 50 is above our 200. So check. That's done. That's a good shape. All right, so you guys know we've talked about ladles before. This came out of a perfect ladle here. And you had a perfect pop up here today. This is the beginning of a 2-day pop. So this finished pretty well up here in the top. I'd like to see it a little higher, but I will definitely watch this because I'll be day trading tomorrow. So we'll put ROST, ROST, on our day trading list for tomorrow and see if this thing pops. And if it stays higher tomorrow on the way up, then you should get a good 2-day pop out of it on the way up. So that was a very good trade. What was there another one, Steve? All right, someone wants to look PLNT. Okay. Planet Fitness. All right, this is a great trade. If you're in this long, I'd stay in it. But again, let's make our analysis from the beginning. So we look at our 15, and it's above our 50, which is above our 200. So that's all good. So we means we're an upward trend, and this has slowly gone to the upside. And I like to see this happen on things. when it ends up coming back to the moving average slowly like this, but still going up, that's usually a very good sign from there. Now, in the case of our MACD, it's starting to run a umph. You can see it's starting to turn, so this might end up doing a moving average pullback. But if I was in this stock, I would stay in it, still making a new high from there. Okay. What Bob said was he likes to look at a little of the history, like over the last 6 months, and look and see how far away did these stocks get from the 15 moving average and does a pullback. So let's go back here and look at Bob's point on this stock at the end of June right here. You can see it went way up and see how far it's getting away from the moving average, and then it did a moving average pullback. And that might be what he's considering here. It went way up and now it's starting to do a pullback. Same way it did right here back in August. So that was Bob's point on that particular trade right there. That's a great question. So the question Steve was asking me is on a trailing stop, if you're using twice the daily average, where do you get that daily average, and how far back do you go? And as a general rule of thumb, just go back and look where the high was and the low was. And so if you have a real big one, look at this high and this low in here, and look at these averages and see what they run. And usually over the last 30 days is all you got to go. And then again, it's just a ballpark. You don't have to be exact on it. That's why a lot of people just go with a normal 7% and just leave it there. But the answer to the question is look at it over about the last 30 days and see what your high and lows are in there. Oh no, I would definitely wait because I've missed it. The back here, here is our high, here is our low, and so you'd wait for it to break that high to get back into it. Where it is right now, no, I would not get into it. If I was in it, I would stay in it, but no, I would not enter at this point. I have no signals that tell me to get in. So if I got in here, I'm just throwing darts at that point, and I don't recommend throwing darts. Yeah, for buying, so the question is buying long or buying short. What do I use the same indicators? And the answer is yes. I keep it consistent every time looking at it. So there's nothing different buying long or buying short. The only thing that influences me on how much I'll buy is the direction of the market. What is my 10,000 foot view? What's my trend? As Bob mentioned earlier, that if that particular stock had been going up and now all of a sudden turns around and starts going down, but my market and my trend is up, I'll take advantage of that short to the downside, but typically it's going to be short-lived. Oh, okay. Steve said that wasn't in the question, but somebody may have been asking about the fundamentals. Uh, fundamentals, you are only for a long position. There are no fundamentals for a short position. So you'll always go long if you use the fundamentals out of the IBD, and then just watch the stock for sell indicators to go short from there. No, Uncle Chuck and I don't talk anymore. Uh, I had a bad experience with him, but I honestly I have no idea. You have to make that personal assessment for yourself. I know I've had some students that have gone to TD Ameritrade, and again, I'm not endorsing them. I don't know anything about them, but just look around. There's no right or wrong platform. Well, his question was if you're starting out, how much percentage should you put into each trade? And first of all, you should start out, make sure you're simulating trading or paper trading. Going back to that point, you'd like to find a broker, if you remember on our checklist, that allows you to do simulated trading so that you understand the mechanics of the buttons. What button am I pushing? Why am I pushing this button? What does that button do? And that type of thing. So the question usually people will ask is, well, when do I go from simulated trading over to real money? And the answer is when you, number one, I'm very comfortable with the buttons. I know how the system works using the software. And then I understand the trading system. I understand how that works. And then third, which is the just as important as the first two, is your simulated account making money? And if that account is making money, then just change over to real money from there. And I don't think I answered that question, Steve. What was the other part of the question? Oh, thank you. Thank you. Yeah, the other part of the question is what percentage to use. Don't start out with more than 20% of your account into one particular trade, even if you're only starting out with a small account. Now, that doesn't mean you have to go in with 20%. You can start with 1 or 2%. Yeah, I have people that start with $300,000. Instead of putting 60,000 in, which would be 20%, they may go in with 5,000, and that's fine too. Go ahead and just use whatever you're comfortable with, but don't go in more than 20% when you first start. All right, KR. Somebody wants to look at KRE. Tony O, that's Slurpee. So Slurpee wants to know? Okay. So what do we have here? We got a perfect 2-day pop right there. There it is. You guys notice that we've had several stocks here with the 2-day pop? So here's what we're looking at here. Here, remember how we wanted it to be at least twice the size of our averages? And again, here's a 2-day pop to the downside that worked perfectly on this one right here. Here's where yesterday it worked, and then here's today. So that's a perfect trade. Excellent. Now, how would I trade this? If I was in this trade, I would stay in this trade. And tomorrow morning at 10 o'clock, if it stayed above the close there and went above that 60, then I'd stay in the trade. But see how far away from this moving average is? And you can look at this 2-day pop. See how it just went down a little bit and came back? So you can expect this to turn around pretty shortly. So if I was in this 2-day pop, I would stay in it. But if I'm not in it, I would not get in this trade. But I would watch it to see if it stayed above that 60 tomorrow, if I'm in that trade. That's a great question. Somebody was asking Steve what software we use for day trading, and should they use that to get started with EOD. The software we use is TradeStation, and the rep that is there, his name is Ray Carey. He's a senior rep there at TradeStation. If at some time in the future you think that you might want to do our day trading class, which our next class is February 9th of next year, uh, then yes, I would suggest going ahead and starting on TradeStation so you don't have to learn 2 platforms or 2 softwares. But if your thing is no, I'm never going to day trade, then just go find a Charles Schwab or a TD Ameritrade or somebody like that you want to use, because you can't really day trade with those very well because they're just not set up for that. TradeStation's really set up for day trading, but it also does very, very well for EOD. I use TradeStation for my EOD as well as my day trading, but I have 6 different accounts at 6 different brokers. But I use my charts and all on TradeStation, and then I'll go over to those brokers and actually make the trade on those brokers. Uh, so the question is, what is the best site for using to find the earnings date? This day and age, to be honest, is just go to your broker and look, type in the stock, and generally it'll come up and tell you that. You can use Google Finance. It'll come up and tell you that as well. You can type in just a symbol in the Google period and it'll pull up a stock, and it's generally on there also. So worst case scenario, if for some reason they just can't find it on those, which they should, I mean, I haven't seen too many without it, go to the actual company's website and look under investors relations, and it'll tell you there when they're anticipating the next earnings date. Okay, so the question is, if you are buying an option and you're trying to split the ask and the bid, for example, 30 cents difference, and you're not getting filled, how long do you wait? And that's a personal choice. The reason I suggest trying to split it is because it saves you a little money. But if you really want it, that stock, or excuse me, that option, then just do it at the ask, and you're going to get filled right away with it. But again, I just like to try to save a little money. Even at half price, usually you should get filled within about a minute. If you don't get filled within a minute, then you need to raise your price up. But it should never take longer than a minute to get filled, or sell for that matter. So the question is, in the IBD, they have the IBD 50 and top leader list and things of that nature. Can you use that on your watch list? And the answer is yes, you can. Again, whatever you want to use in order to build your watch list that you like. And again, excuse me, it may take you a little while to build that particular list that you want. Pardon me a second. Ah, but yeah, you can use those if you so choose to. Okay, so let's look at GILD. Okay, let's look at GILD. All right. So here's the problem with GILD. Again, look at your overall here. You can see where your 50 is up here, your 10s, your 15s in the middle, and your goals at the bottom. So what this is telling us is that we got a close here above. Now we had a MACD close a while back. This is an example of what I was telling you about before. This is so far away from moving average that the MACD closed below it got above. So I would wait for tomorrow if this closed above 74 uh, at 10 o'clock, then you would have a good buy to the upside on that because we already have our MACD right here, but we just didn't have a good cross here. But again, look at where your 10,000 foot view is. It's really not the best environment for that to be going to the long side. All right. Well, I want to thank you guys. I enjoy this. If you'd like to do it again, please call Peggy and let her know. If you enjoyed this, tell her and let her know. If you did not like it, call and tell Bob. No, I'm kidding. But thank you, Steve, and thank you, Bob, for your input. And hopefully we'll get this link out to you very shortly. That'll have all of Bob and Steve talking. I understand that some people said they couldn't hear Steve or Bob, so I apologize for the technology there, but sometimes that happens. But we tried to repeat all the questions for you, so you can go back and look at it from there. So from the trading capital of the world of downtown Land O'Lakes, Florida, you guys have a good night. Good night.